Answers. I'm Allison Southwick, and I'm joined as always by Robert Brokamp, personal finance expert here at the Motley Fool.
Hello, Allison.
Today we're going to learn more about the growing cannabis industry and whether or not you should invest in it. And if you are, how should you invest in it or not? I don't know. We're going to get help from David Kretzmann. All that and more on this week's episode of Motley Fool Answers. So, bro, what's up?
Well, Allison, as you know, in this segment, I usually choose one item from the news and talk about it for about 5 minutes. But I read so much and I have trouble narrowing it down. So this time I'm going to try something different. I'm going to highlight 3 things, a little shorter time for each, and one fun/weird fact. Are you ready?
I'm ready. Let's bring it. Number one.
Number one, defer your gains with qualified opportunity zones. So this is a lesser known creation of the Tax Cuts and Jobs Act passed at the end of last year. Basically, if you sell an investment for a profit, normally you have to pay taxes on the capital gains, but you can avoid that if within 180 days you invest in these qualified special opportunity zones. It was a way for Congress to try to get people to invest in lower income areas of the country. It's so new that they haven't worked out all the details, and just in July did the IRS actually designate what these special opportunity zones are. But basically how it works is you sell one investment, you invest it, don't have to pay taxes on those capital gains. You can defer them up to the year 2026. And if you keep holding for several years, your cost basis goes up, so your gain is actually shorter, at least in terms of the taxable gain. You invest in a business or real estate in one of these lower income communities. If you hold that for 10 years, when you sell, if you have a gain, you don't pay taxes on that gain. It's an extraordinary opportunity, but they're just starting to work out the details. So if you are interested in doing this, learn a lot of the details. One great recent article on it can be found on kitces.com. That's KITCES.com, written by Jeffrey Levine. It's called Using Qualified Opportunity Zone Funds to Minimize Capital Gains. So check that out. Number 2, just in time for the holidays, get online prices at bricks and mortar stores. And this comes from Money Magazine, an article written by Paul Schrodt, titled 10 Big Chain Stores That Will Secretly Match Amazon's Low Prices. And it essentially listed a bunch of stores where you can go in and with your phone and say, look, here's the price on Amazon.com. Will you give it to me? And they will do it. Those 10 stores are Bed Bath & Beyond, Best Buy, Fry's, Home Depot, JCPenney, Nordstrom, Lowe's, Staples, Target, and of course, Joann Fabrics. And I did some research and found some other stores will do this too. Dick's Sporting Goods, Walmart will do it. So I thought that was actually kind of interesting. I went and actually tried it at Best Buy when we were getting a gift for my daughter, and it worked.
Isn't there like a little way that you can scan barcodes into Amazon too? So that would make it super easy to actually do the apples to apples comparison, right?
Yes, and that's a good point because each store has their own rules about this. Mm-hmm. In some of the stores, the rule is it has to be the exact item, and it has to be sold directly by Amazon, not by a third-party seller. So that would be very handy. But some stores, like Home Depot's and JCPenney's, they won't only just match the price, but they'll give you a 5 to 10% discount on it. So something to consider. Item number 3, and it's a sad one coming straight from Bloomberg. Here's the headline: America's student loan debt crisis is about to get much worse. So it starts with these sad stats straight from the article here. Federal student loans are the only type of consumer debt with continuous cumulative growth since the Great Recession. Student loans have seen almost 157% cumulative growth in the last 11 years, compared to just 52% for cars. And actually, overall mortgage and credit card debt has gone down. When you look, too, at delinquencies, 1 in 10 kids, usually, but 1 in 10 people with student loans are delinquent. That means they haven't paid it in more than 90 days, compared to just like 1 to 4% for mortgages and car loans. And it's about to get worse because school is getting more expensive and interest rates are going up. So it's like this double whammy on kids. So the bottom line here is, at this point, there are kids all across the country, one of mine included, who are applying to colleges. And students of all ages are applying for financial aid now because the FAFSA opened on October 1st, the FAFSA being the free application for federal student aid. People are going to be making some big decisions about where they're going to school. And it's going to affect their life for the 5 to 10 to 20 years after that, depending on how much student loan they take out. So please, please, please do whatever you can to graduate without student loans. Could be looking harder for scholarships, considering ROTC, staying in state, going to community college for a couple of years, but whatever you do, try to graduate with as little debt as possible. And then finally, the fun fact, this comes from the new Bogleheads on Investing podcast. It's hosted by Rick Ferry, who's one of my all-time favorite investing writers. The very first episode featured an interview with none other than John Bogle, the founder of Vanguard and the father of the index fund. They talked about the beginning of the index fund. And it turns out when they first launched the fund, it was such a dud that they didn't collect enough money to buy all 500 stocks. So they could only buy 275. So they tried to do like a sampling of all the sectors and industries within it. And the first manager of the fund was a young woman who did it only on a part-time basis. Her other job was working in her husband's furniture store in Wilmington, Delaware.
Really?
And from those inauspicious beginnings, the Vanguard 500 has since grown to be the biggest mutual fund in the world.
Wow. That was a fun fact. Here we are amidst Reefer Madness 2018.
Light it up.
Today we're going to talk about cannabis. Is it the new crypto for investors? Some of you are nodding your head right now. Some of you are shaking your head. Some of you are shrugging. So joining us to understand it is David Kretzmann. He is the head analyst digging into the growth possibilities of cannabis. I know there's going to be so many bad puns. And we aren't even going to intend them. Like that was actually unintentional that I wrote digging into the growth possibilities and I'm only reading it now
well
and
done.
Rolling my eyes. Ugh.
Rolling.
You're right.
Oh, man. This is going to be the theme of the conversation.
We're just going to keep moving. So yes, David, thank you for joining us.
Thanks for having me. Great to be here.
So we're taping this many weeks in the future. It turns out where we are right now in time, they just legalized cannabis up in Canada.
Yep.
So you've been on the show before. We could waste time being like, David, tell us more about yourself, but let's just get into it, shall we?
Yeah.
Okay, so
But
Canada.
you're not boring. Let's make that clear.
Hey, I appreciate that, bro.
So cannabis, Canada. What did they just do? How did they legalize it?
Yeah, October 17th was a big day in Canada. They became the largest country in the world to legalize adult use of recreational cannabis. Up until this point, Canada had allowed medical cannabis. So there was like a small fledgling medical cannabis industry, but the country took a huge step on the 17th to legalize recreational cannabis on a national scale. Now, some people might be asking, well, isn't it already legal in some places in the U.S.? Like you have California, Washington, Colorado. And that's true. But in the U.S., and I'm sure we'll talk about this, it's still federally illegal. So that's why Canada, being such a major economy and country, taking this step is just a huge milestone for the industry for a substance or a crop that's really been under prohibition for almost a century now. That's what makes this such a big deal.
So if I understand correctly, Canada, at the federal level, actually gave a lot of control to the provinces over how they regulate cannabis. Is that correct?
Yes.
So it's going to be kind of different locally.
Yeah, so nationwide it will be legal, but each province, kind of similar to the states here in the U.S., they have ability to make their own laws, like whether you're 18 or 19, and exactly how you'll be able to access cannabis. Some provinces are totally monopolizing retail, so the governments will actually build and manage the stores that sell cannabis. Other provinces are taking more of a mix between privatized retail, public retail. So you're seeing kind of a grand experiment all across Canada. So you do have at least that legal framework clearing up on a national scale, and that lets these more local experiments take place on the province level.
And here in the U.S., it seems like we're going in the direction of increased legalization. What's your take?
Yeah, at this point, we have over 30 states that have legalized cannabis in some shape or form. Most states are starting with medical cannabis, but now we have 9 states that have also legalized recreational cannabis, where whether it's medical or you're just doing an edible and just trying to get that high effect, in one way or another, you're able to access medical cannabis. And the elephant in the room continues to be what exactly the federal government does, because at this point, the Drug Enforcement Administration still lists cannabis as a Schedule I substance, and that goes back to the 1970s. And essentially, that means cannabis is treated as the most dangerous substance, or among the most dangerous substances that's out there. So cannabis is Schedule I. Compare that to some Schedule II drugs like meth and cocaine, and that just shows you, maybe we can reprioritize that at some point, just the way things are going. But yeah, I think it's just a matter of when, not if, when the federal government decriminalizes cannabis. Even President Trump has said he would probably support a bill, which is working its way through Congress now, that would essentially take the federal government out of it and at least let the states make that call for themselves. But there's clearly a tide shifting here with public opinion in the U.S., where the majority of Americans, regardless of where you fall politically, most Americans favor the idea of at least decriminalizing cannabis. Most Americans favor medical cannabis. And then you're seeing more Americans favoring even recreational cannabis and essentially letting people make that decision for themselves rather than keeping it illegal.
Yeah, some of the estimates for growth in the industry, and granted, this is from the Cannabis Industry Annual Report, so they might be a little skewed, but they anticipate that by 2025, between recreational and medical use, cannabis will become a $24 billion industry, twice as much as wine. And is that just for the U.S. or was that?
That's just the U.S.
Yeah.
Yeah.
That's bonkers.
Yeah, it's a big industry. And obviously at this point, I think what's interesting about cannabis is that there isn't really any direct comparison for an industry that's manifesting in this way. Obviously, it's been an illicit or a black market for almost a century now, but there's no direct comparisons for where cannabis stands today. So at this point, you have a lot of different projections and estimates as far as how big the opportunity could be. People trying to figure out, okay, how big is the black market in cannabis? What will the legal cannabis market look like? So all those projections at least suggest that it's a pretty substantial opportunity. And then when you take into consideration the potential global opportunity as more countries legalize medical cannabis and then most likely recreational cannabis down the road, that really should open up legal cannabis to an increasingly mainstream audience and become a bigger industry as a result.
So we're talking about investing in cannabis. What really are we talking about? What kinds of companies? Because I don't imagine I'm just going to go hand some money to a hippie standing out in a field in the middle of Oregon.
You could.
I could.
It's just not a good investment.
But I just don't know that that's the great way.
Probably
right way
not
to do it.
encouraged. Yeah. At this point, Canada really is the haven for a lot of these legal cannabis producers. It's by far the most attractive market to raise capital because these companies can actually go public on the Toronto Stock Exchange or the TSX Venture Exchange for smaller companies. So it's relatively easy to list your shares publicly, access investors that way. And the fact that cannabis is now legal on a national level means that the banks are suddenly supporting cannabis companies. So you're able to get a loan from banks or even have an account with a bank, whereas in the U.S., because it's still criminalized on a federal level, a lot of banks are kind of nervous to get involved in supporting any form of the cannabis industry in the U.S., even though it is legalized in some states. So you're seeing Canada attract more and more attention, investment, entrepreneurship as a result. You have companies really all along the value chain. You have companies that are looking to produce cannabis, companies that are looking to distribute cannabis. And oftentimes these companies are actually vertically integrated because there isn't, unlike other crops right now, there's not this excess supply of cannabis you can access. So if you want to sell cannabis or sell a branded cannabis product, you also need to grow the cannabis at this point. But part of what's exciting here is that we are treading new territory. So we'll finally see how this market unfolds over the next year and beyond in Canada. So yeah, that gives you an idea of the landscape. But right now, there's probably over 100 publicly traded cannabis companies up in Canada. And yeah, they're all across the spectrum as far as where their place is in the industry.
So there's always a dumb way to invest in something, and hopefully there is a not dumb, foolish approach to investing in the potential growth of the cannabis industry. What is your capital F foolish approach?
So first, let's start with the things that you want to avoid. And I think first you have to recognize that there is a lot of speculation here. There's a lot of frothiness, and partly for good reason. Like, this is a new opportunity. I personally am increasingly convinced that this is the beginning of a large, legitimate, legal cannabis industry. So I think there is reason to be excited. But at the same time, we have to tailor our expectations because the shares of cannabis companies today, they're not trading based on present day fundamentals or a track record, because most of these companies have only been able to be in existence legally for 3 to 5 years at most. And now finally in Canada, we have a national recreational market. So there is an increasingly large opportunity there. But the shares of these companies are being priced based on future expectations and hype. So there's undoubtedly a lot of frothiness here. Like, I'm sure people have seen Tilray in the headlines. It's a company that went public in July. They're a Canadian producer, but they went public directly on the NASDAQ. Gained a ton of attention. I think their IPO was initially priced at about $20 a share, went up to as high as $300 a share within a couple months. And as we tape this right now, it's around 170. When this airs in a few weeks, who knows where it'll be? It could be at 300 or at 20 for all I know. So there's clearly a lot of shorter term speculation. So as capital F foolish investors, we don't want to get caught up in that hype. We want to take a long-term business-focused approach like we do with any other industry or company. So that's what we're trying to do here at The Fool with some of our cannabis investing services that we've launched so far this year. But recognizing that this is still dominated by early stage companies. They're at a riskier stage in their life. They don't have much of a track record. So there will continue to be a lot of volatility. And as a result, since there isn't much in the way of a track record or present day fundamentals, a lot of what we have to do is look at the qualitative factors. So get a sense for the leadership teams at these companies. Who's at the helm of the ship? Is there a healthy amount of insider ownership? Because we want to be sure that the individuals who are spearheading these companies, if they don't have a whole lot of conviction or ownership in these companies, why should we as investors? And then you also want to pay attention to the balance sheet. So essentially, how much cash does a company have in the bank? Because virtually none of these pure play cannabis companies are actually making any money yet. So they're unprofitable. And as a result, they're burning a lot of cash, which isn't necessarily a bad thing, because if you do agree that there is an opportunity here, it makes sense to invest in a production facility, a processing facility, investing in marketing and brand building. But you want to be sure that the company has enough cash to support that. So those are some of the factors that we look at. And then we also want to taking a long-term approach, we want to be sure that we're finding companies that are positioning themselves to be a relevant player in the long term. So we're not necessarily worried about where the share prices will be in a month or 3 months or even a year. We're more interested in what are the odds that this cannabis company will be a relevant and thriving player in the industry 3+ years from now? So trying to take that long-term approach is kind of the way that we're playing a different game than a lot of the speculation and short-termism that's dominating the category right now.
So are there a couple specific company names or stocks that you want to put out there and for any listeners that want to maybe consider and start looking into the industry?
Sure. So we've kind of distinguished between within the initial companies that we've recommended to people as buy recommendations. We have the pure plays. So these are companies that generate the majority of their revenue from cannabis in some shape or form. And then we also have picks and shovels companies. And picks and shovels companies we've identified as companies that have a strong underlying core business that isn't in cannabis, but then the potential opportunity with cannabis is kind of an add-on or a cherry on top, but it isn't the main thesis behind buying the company. So starting with a picks and shovels company, I think Constellation Brands is a company that some people will be familiar with, or if people have followed this space at all, you might have seen them in the headlines. This is a company behind Corona, the beer, and then a variety of other wine and spirits brands that they have in their portfolio. They've been one of the better performing alcoholic beverage companies really in the past several years, unlike some of the other bigger players. Last year, they invested a smaller amount into Canopy Growth, which is one of the larger cannabis producers in Canada. And then in August, Constellation Brands re-upped that investment in a huge way. They invested an additional $4 billion into Canopy Growth, taking 38% control of Canopy, 4 of the 7 board seats. So essentially, Canopy Growth today is a cannabis offshoot of Constellation Brands. And to put that number in perspective, in the first half of 2018, every single cannabis company, public and private, around the world had raised $4.3 billion.
Wow.
That's the first half of this year. So in a single day, Canopy Growth essentially raised the same amount that every other company had raised. So this just puts Constellation and Canopy Growth on a whole other level compared to other companies. So from a picks and shovel angle, I like Constellation Brands because this is a company that pays a dividend, that they generate an increasing amount of free cash flow. So it's a healthy business. They have a strong core business, but they're also making a fairly aggressive push into cannabis. And they, during the announcement of this investment, they said that they expect the legal cannabis market on a global scale to hit $200 billion by 2030. So they see this being a big opportunity, and they're making a substantial bet on it. So that would be the type of company that I start with. It's a business that's easy to understand. You can sort of see where cannabis could complement Constellation Brands because they have a lot of experience building brands and distribution with a highly regulated product like alcoholic beverages. And it makes sense that they could transfer that knowledge over to cannabis in the coming years. And I like the fact that they're taking a long-term approach to this. They're not investing in cannabis to juice their share prices or their share price in the short term. They're very much thinking of this from a decades-long perspective. And I think that's the right way that, as foolish investors, we should be thinking. With pure play companies, these are obviously much riskier companies. Like I said earlier, a lot of these companies are burning cash. They're unprofitable. The valuations are likely going to be very lofty, no matter which way you slice it. But one company that I do like that's a pure play cannabis producer in Canada is a company called CannTrust. This is a company that's still valued at over $1 billion. Their revenue over the past year is still pretty minimal, but they've registered among the most medical cannabis patients in Canada compared to the other bigger producers. And they trade at it, even though their valuation does sound lofty, like $1 billion for a company that's generated about $30 million in revenue over the past year. That valuation is actually really attractive compared to Canopy Growth or Tilray or Aurora Cannabis or some of these other bigger players. So I'm not making the valuation argument necessarily, but compared to some of these other bigger players, I think it is a more attractive price. They also have a partnership in place with Breakthrough Beverage, which is one of the largest private companies in the U.S., and that's a company that is one of the leading beverage distributors in North America. So in the coming years, potentially, CannTrust will be able to plug its cannabis products into that distribution network of Breakthrough Beverage. It's a founder-led company. They have a healthy balance sheet. So again, this is one where it would still be incredibly volatile, but I like the approach the company is taking. When I spoke to their president this summer, he said, in 18 months or so, I hope that we're not in the business of growing cannabis, because when you think about it, no one cares about who grows the coffee for Starbucks or the tomatoes for Heinz. People are really just interested in the end product. So the long-term vision for CannTrust and also some of these other companies is really in building brands, because at the end of the day, when you're dealing with what could potentially become a commoditized crop like cannabis, the greatest value to be captured will be from the brands that can build that the companies that can build those brands that resonate with the end consumers. So just as you see Anheuser-Busch or Budweiser with alcohol, or Starbucks with coffee, or Heinz with tomatoes, I think you're going to see in the coming years and decades some pretty powerful global brands be built in a similar way around cannabis. And I like the approach that CannTrust is taking to get there. There's certainly it's not a slam dunk that they will, but I do like the approach that they're taking. So that's one that I look at as a promising pure play company.
What if I just want an ETF?
There are a few ETFs out there. Again, limited track records there because there hasn't been much of a track record to have in this industry. The one danger with the ETFs is that they're often highly concentrated in the bigger players. And I would say that most, if not all of the bigger players are trading at some frothy valuations, potentially unsustainable levels. So you still want to understand what you're buying. I wouldn't blindly buy an ETF. So first you'd want to see what their concentration is in the top 10 holdings, what those companies are, and if you're comfortable with the idea of having the majority of that ETF be in some of those bigger players. And So for me personally, I like the idea. If you are looking to get exposure to this category, start with a company like Constellation Brands, a more established multinational company that is looking to make some investments in the category. And then if nothing else, the approach that we're taking here at the Motley Fool with our cannabis investing recommendation services is we're almost building our own ETF. So recognizing that this is a type of industry, given that it is at such an early stage, there will be plenty of losers in the coming years. You're going to see some consolidation. You'll see some companies that fail to gain traction and just won't be able to raise cash, and they'll go bust. But the thesis that we have here is that there will be eventual long-term winners in the category, and that a majority of the gains will likely come from a small number of winners. So almost approaching it like a venture capitalist, where you're making a series of small bets. You recognize that probably at least half of those bets won't work out like the way you hope, but there will be one or two big winners that more than make up for the losers. So with an ETF, you might be able to capture that, but I think over the long term, if you are interested in the space, it makes a little more sense to build a diversified portfolio among a few of the players, and go with that approach. But to each their own. I would just tread carefully with the ETF approach.
If someone's interested in this, how much of their portfolio do you think they should devote to these types of companies?
It should definitely be a small part of your overall portfolio. Obviously, each person's circumstances and risk tolerance will be different. I've personally invested in all 10 or eventually 13 of our recommendations by the time this podcast is released. So I've invested my own money in the companies that we've recommended in this space to our members, but I just started with about 5% of my overall portfolio. And I'm young. I'm adding more money regularly to my investments. So that's the type of risk that I can afford to take, even though 20 or 30 or 40% swings in these stocks, especially the pure plays, isn't all that uncommon. It's actually probably more the norm, rather than the exception. So for someone who's in or near retirement, or if they're not adding a lot of money to their investments, you just want to take a step back and really be sure anything that you put into the cannabis stocks should be money that you certainly won't need in the next 5 years, and shouldn't be a substantial part of your overall portfolio. So I would say, when in doubt, start small. There's no rush, because the way that we're approaching is like this will be something that unfolds in the coming years and decades, and there will certainly be a lot of peaks and valleys along the way. We'll have a lot of hype like we had around October 17th and legalization day in Canada. I'm sure if and when the U.S. federal government decriminalizes cannabis on a federal level, that'll be a huge catalyst for the industry. But yeah, when in doubt, start small.
All right, David, thank you. I should probably have a disclaimer. As always, the Motley Fool may have formal recommendations for or against the stocks we talked about. Don't buy and sell stocks based solely on what you heard on this show. David, will you stick around for a little game?
Of course.
All right. So I think it's safe to say that Ben & Jerry's ice cream company feels a connection with weed.
I think so.
Yes.
Yeah.
Flavor names include Cherry Garcia, named after the lead of the Grateful Dead. They also have Fish Food, another band that enjoys just getting together in a field and smoking weed and just hanging out for long hours. And then, of course, the ice cream half-baked. So, for today's quiz, you guys have to guess, is it a weed strain or a failed Ben & Jerry's ice cream flavor?
Boy. Let's do it.
Okay, the first one is Snoop's Dream.
Ooh, boy.
So you'd have to say it's most likely weed. So I'm going to say it's a trick question, and I'm going to say it's ice cream.
I'm going to say it's weed.
You know what? Weed has it. It is indeed a strain of weed. All right, next one. Super Lemon Haze.
I'm just wondering what the ice cream flavor will be. Does anyone want an ice cream dominated by that much lemon? I don't know if anyone's asked for that.
I love lemon ice cream.
Okay, all right, I stand corrected.
Oh, man, I love lemon ice cream.
All right, so I'll go with weed.
Yeah, what's even better than lemon ice cream? Lemon weed. I'll go with weed again.
It is indeed weed. All right, the next one is Au Pair.
Oh, that's interesting. I can't imagine. Well, I'll go with ice cream.
Yeah, I like ice cream there. But
Depends
again,
on how you're hearing
cream.
that word.
Ice cream.
Ice cream. It is indeed a failed Ben & Jerry's ice cream flavor. It was fresh pear ice cream with a hint of almond and a light fudge swirl. But apparently fans did not like it.
Yeah, shocker.
Yeah. The next flavor or weed strain,
Hint, hint.
red and ginger.
Red and ginger. What kind of ice cream would be like? I'm gonna have to go with weed on that one.
I'll say ice cream. Are there some Fred and Ginger celebrities out there?
Well, yeah,
Yeah.
Fred Astaire and Ginger Rogers.
Okay,
but I don't know
have
what
no
kind of
idea who those
ice
people are.
cream.
Showing your age there.
Yeah.
I know. I'm totally clueless here.
That's okay. All right. Rick thinks it's weed. You think it's
I think I said weed.
weed. What do
Ice
you think?
cream.
Ice cream. You're right. It's ice cream. This flavor featured ginger ice cream with chocolate bow ties. Aw. All right. The next one you have to guess. Sour tsunami.
Well, it sounds more ice creamy to me, but what do I know?
You know nothing. About
Nothing.
weed.
I think I'm losing this
You are-
competition.
Yes, you are.
I'll go with weed strain.
I think it's a sorbet.
It is a weed strain.
5 for 5. Okay.
And the last one is black and tan.
Goodness gracious.
I say it's both.
That's true. It is hard to double. There are so many strains of weed. It is hard to know. But if it is a Ben & Jerry's flavor, that trumps whether or not it is.
I'm going to say weed.
Yeah, I'll go with weed.
Ice cream.
It is ice cream.
Oh my gosh.
It is
I don't think I got a single one right.
A cream. I don't think you did either.
Jeez
It's a
Louise.
cream stout ice cream swirled with chocolate ice cream. It sounded pretty good, but then apparently there's some British history and Irish fans did not like it. So, anyway,
Now, Allison, did you bring samples of all these for us today?
of the weed, yes,
Okay.
because these ice creams don't exist anymore.
Oh, that's
So
right.
here we go. First, we're going to start off with Snoop's Dream.
Excellent.
It's very, I don't know. No, we have none of that here. All right, so yeah, that's all I got for you, David. Thank you so much for hanging out with us.
Always a pleasure. Thanks so much.
It's been a lot of fun. Well, that's the show. It is edited tokingly by Rick Engdahl. Our email is answers@fool.com. For Robert Brokamp, I'm Allison Southwick. Stay foolish, everybody.